human capital first and foremost, and physical capital. Human capital, I mean, really, there is the payoff, particularly in a region where you have such young population, the payoff to investing in education, in health, is unparalleled. So doing whatever countries need to do to try and meet the Sustainable Development Goals objectives in terms of educating people, making sure that all kids have access to good education, girls on a par with boys, making sure that health indicators continue to improve. Basic health infrastructure. That is, I think, the example of Ethiopia that you mentioned, where quite a bit of investment was made in rural health clinics, rural health workers and the like. Just investing in health and education, I think, is first and foremost. Second, I think, is of course ensuring that you have the basic infrastructures that you need to support, robust economic growth. I think this is a priority. So in our dialogue with countries, say like Nigeria, why we emphasize revenue mobilization in Nigeria is exactly because that is the Achilles heel for the Nigerian economy, that the federal government doesn't have enough resources to be able to ensure that there is the highest quality education, highest quality healthcare for the population as a whole. So a lot of our policy advice is really predicated in ensuring governments have the resources to be able to invest in these very important areas.
Nigeria, as you mentioned, is at a difficult moment. Oil prices down. A lot of hot money which came into the economy is looking to exit. They're only just recovering from the last oil price crash of 2014. I think Citibank are predicting that by the end of the year, the Naira dollar exchange rate will be about 475 Naira to the dollar. What does that mean for ordinary men and women in Nigerian cities and in the rural area?
So, Nigeria is really hurting because on top of the impact of the pandemic, the global downturn, which is reducing demand for non-oil goods and services, you also have this calamitous decline in oil prices, one of the most severe declines that we've ever seen. So relative to other countries in the region who are being impacted more by just the measures needed to contain COVID and external demand shock, Nigeria also has this additional oil shock that it's going through. For the average Nigerian, of course, first and foremost, I mean, this will mean less income for the government. So the government is less able to provide the goods and services that it normally does. More broadly, and the less income there is, of course, within the economy, the less employment opportunities there will be, the less prospects for improved standards of living. I would also underscore, though, the resilience of Nigeria, and that there remains quite a lot of scope for Nigeria to exit this in a strong fashion, subject to the country laying the groundwork for this intervention, for this recovery. Yeah? I mean, this includes thinking about how the government can broaden the tax net and measures like that.
Most African economies are not oil exporters. Most Africans are doing subsistence agriculture. How are food systems coping on the continent? Is there still a strong link between urban food markets and rural producers? What advice are you giving your members on how to support farmers at this crucial moment of lockdown?
Very good question. Of course, we're not experts on the agricultural sector, but in terms of the importance of the rural area in many countries, as you noted, subsistence farming comprises a big share of output, and creates a lot of employment for people in the region, of course, and is the mainstay and the main source of food production in countries. So its continued functioning is critical for the well-being of countries. So far, I mean, we're 6 weeks or so into this pandemic. In most countries, I think the spread of the virus into rural areas seems to have been limited, and so food security has not been threatened to a significant degree. But of course, if the pandemic continues to spread, it can be a source of vulnerability, and it's something that governments are going to have to pay quite a bit of attention to.
Are there any opportunities to be had in this most difficult of times? Is there any thread of silver lining that African countries can pull out of this situation?
So, I am certain that this crisis is going to have fairly profound implications and fairly profound impact on the way business is done, on how countries think about budgeting, or even the kind of economic structures they want to have. My sense will be, if nothing else, but as a quick reaction to the disruption in supply chains, pharmaceutical supply chains, concerns about self-sufficiency in some critical areas, my sense will be that there will be much more attention to some sectors where countries will feel vulnerable about and maybe wanting to internalize protection. I would be surprised also if it's, if companies also, so it's not just sovereigns, but households also will be, corporates also will be thinking about how to do more self-insurance, how to have less stretched supply chains. I think this is reactions like that, I think, are inevitable. The question is how much will both sovereigns and households be ready to sacrifice efficiency in favor of self-insurance. So it's to be seen, but for some sectors at least, I would expect some rethinking about that. A second issue, an example I've been citing is, I was having a conversation with a minister from West Africa the other day, and he was telling me that, they're very concerned that the virus may spread on banknotes. So they're trying to see what can be done to accelerate the use of mobile cash, mobile money. And again, you're going to see some reactions like this, some innovations, some reforms being forced and being adopted. So and then I think for governments, I think are going to need to find a different way of thinking about how much to allocate for contingency planning and the like. So I think this definitely will have longer lasting, and by and large, I think countries' resilience is being tested, and depending on how they come out of it on the other side, we'll see what positive lessons can be learned. The one thing I do hope, though, that some more attention will be given to going forward, and will be much more of a structural way of discussing in the future, is social protection networks. Right now, countries are scrambling to try and find, voter registers, all manner of information databases to try and find a way to target support for people whose incomes, whose livelihoods are being disrupted by the pandemic. Imagine if we had these systems ready and we could quickly draw on them to roll out support vulnerable households now. So I think that part of the equation is going to be, I think, a very important feature going forward, and it's certainly something I hope governments will invest a lot more in.
To get you clear, more of a granular, detailed grip from governments on the SMEs, on the voters, on the most vulnerable people in their societies?
Yes, I mean, I think we have many countries have disparate databases, right? I mean, you have electoral registers, and some in some countries you also have small social protection schemes. You have mobile data that you can collect from telecom companies. There's a whole bunch of data sources, but right now they're not as well used to identify who might be the neediest in society. And so countries are scrambling a bit to improvise, innovate, to try and identify those people that are going to be impacted the most. So a more structured database where you can you have a better sense of who the poorest 20% or so of the population are, that you can get support to at a time like this, would be really a fantastic outcome across the board. Find this information.
It seems that financial institutions globally are much more agile than they were during the 2008 crash. It took this time no time at all for the US and the EU to jump back into bond buying. The G20 and Bretton Woods institutions such as yourselves are moving quickly to debt moratoriums and other forms of disbursement. The Federal Reserve is doing its swap deal with other central banks around the world, and immediately this time. Would you think that's fair to say? Is there sort of some muscle memory since the previous crisis?
I think so. I mean, one other factor this time round is how synchronized the downturn is. As Kristalina has been saying, no country is going to be spared. And so that has everybody on edge, and wanting to do everything possible to minimize disruption. I have to also say, the severity of this crisis, how all-encompassing it is within domestic economies also, is another factor which is prompting these very aggressive measures, throwing out the rule book in many cases in terms of the policies that are being considered. It really is once in 100 year or so crisis that we're facing, a health crisis in the first instance, but one, of course, that has a huge interplay with economic lives. So, the size of the crisis also is really quite different. I mean, going back sub-Saharan Africa specific, last time round, if you remember, within the region, it was mainly those countries that are more integrated into global capital markets, more integrated into global supply chains that were hit at the time of the last crisis. And other countries had also some fiscal space. Debt levels were relatively contained, that they could tap in to mount a supportive fiscal policy position. This time, it's, as I said earlier, every country in sub-Saharan Africa is going to be impacted, and some countries way more so. I mean, those countries that traditionally have had some sorts of some resilience. For example, countries like Mauritius, Seychelles, which rely on tourism, are going to be very, very severely impacted. So, everybody's hurting, and I think institutions like us, but also central banks, doing whatever they can to support economies is to be expected.
What do you make of call by various academics for the IMF to issue $500 billion in special drawing rights? Just quoting from a piece they wrote recently, they said, the harsh truth is that the fund lacks sufficient resources to deal with the global crisis, and the decision taken last year to postpone the increase in quotas until 2023 came at the worst possible time.
So, just to be very clear, we do have, a $1 trillion worth of lending capacity and all of this now confirmed by actions that have been recently taken by the membership